All right, this is going to be a preview of SpaceX's earnings, which are coming up on August 4th, 2026 for Q2. All right, so what I'm really expecting here is a $7.23 billion number for revenues in Q2 2026. This is up from $4.694 billion that was reported in Q1 2026 and is about 5% greater than analyst estimates, which right now are about $6.87 billion. Now, we're going to go through each of the segments. SpaceX reports in three different segments: space launch, connectivity, and AI. Most of the gains here I'm expecting are coming from the AI, but we're definitely going to go through all the other segments as well. Okay, we're going to start here with the space launch segment. Now, this is the one that's going to give us actually the least insight into how the business is going, because you really have to understand how SpaceX recognizes revenue in this segment. For example, they've launched 40, there are around 40 or so launches in Q2, right? But SpaceX only recognizes the revenue when it's a customer that's buying it. So SpaceX launches, it has its own internal payloads, and then it has customer payloads. And then the customer payloads are divided between commercial and government. Now, the internal, like when they launch Starlink, none of that revenue is recognized in this segment because it's internal. The costs and the benefits from a Starlink satellite launch is going to be in the connectivity segment. So we're going to have 40 launches here, but we're only going to analyze basically a small percentage of them. I said 40 earlier. The actual number of total launches in Q2 is 38. So there were 40 launches in Q1, there were 38 launches in Q2, but there were 7 commercial payloads in Q1, and there are 9 commercial payloads in Q2. So this number will be higher in Q2 than in Q1. Additionally, the mix of launch was more high revenue for SpaceX. For example, there was a Crew Dragon and there was a Falcon Heavy. Now these are higher revenues. So I'm projecting $830 million for the space segment in Q2 2026 versus $619 in Q1 2026. But again, this is not going to be the main driver of the stock. It's going to be like this is peanut. I mean, we're talking specifically about 9 commercial launches out of 38 total launches. Like again, right now and for the immediate future, the space launch revenue itself is not going to be what's driving this company and what's driving the stock. So when we're talking about revenue, in this segment specifically, it really is de minimis to the overall SpaceX story. Now, what is not de minimis is the cost. The costs are actually very important to look at here. Now, margin-wise, each Falcon 9 launch and each Falcon Heavy launch are actually highly profitable for SpaceX. So that's not what's going to drive costs here. The costs here are actually the Starship development costs. SpaceX recognizes all the R&D in relation to Starship in the space launch segment. In Q1 2026, R&D costs in this category of space launch was around $930 million. I'm expecting this to actually go up pretty significantly because there's been a ramp in Starship development. For Q2 2026, I'm estimating R&D costs in the space launch segment to be well over $1 billion. I'm looking at $1.075 billion is my current estimate. So coming with this a very much higher number for R&D costs for the overall segment, even though I'm projecting revenue to go up from $619 million to $830 million, I'm projecting the operating loss to deepen in the space segment specifically from a loss in Q1 of $662 million to a Q2 estimated loss of around $700 million. And on an adjusted EBITDA margin, just on adjusted EBITDA number, I'm expecting something similar. So in Q1, the adjusted EBITDA was negative $351 million, and in Q2, I'm expecting somewhere along a negative $375 million number. Again, so to recap here, the revenue number we're expecting to go up, but it's really not relevant, the revenue number from the space launch segment. Again, because SpaceX is consuming almost all of its launch capability internally for its Starlink, we're not expecting this number to actually mean anything until Starship really ramps, and then SpaceX has excess capacity in which it can serve customers sort of at mass. Right now, it's selling some capacity to customers just to maintain the relationships, and they're selling to governments just to maintain the relationships. So the revenue number, again, we're not going to be really carrying for the next few years. We will be tracking the R&D number specifically just because that's where the Starship R&D is budgeted. All right, moving on to the connectivity segment. Now, connectivity is where SpaceX is going to be making most of its money for the near-term future. Connectivity, again, is where SpaceX recognizes revenue from its Starlink product. I'm expecting on a top-line basis the number to go from 3.26 billion in Q1 to 3.85 billion in Q2. So this represents around an 18% increase quarter over quarter and a 40% increase year over year. There are four different revenue drivers within this segment. That's the kit hardware, the consumer service, the government, and the enterprise and mobile. So we'll talk about the consumer segment first. Now, at the end of Q1, there were reported 10.3 million subscribers. Elon already said on June 4th on X that there are 12 million subscribers. So I'm just extrapolating based off that number, and I'm coming up with an estimate at the end of Q2 of there being 12.65 million subscribers. Now, the subscriber number is going up, but you also have to be aware that the consumer ARPU number is going down. ARPU, again, is average revenue per user. The reason ARPU is going down is because as they open up subscriptions to more and more countries, these are third world or less developed countries, they can't charge as much. So the incremental subscriber here is going to bring down the ARPU number. In Q1 2026, the ARPU number was $66. This is compared to Q1 of 2025 when it was $86. So be aware as the number of absolute subscribers go up, the average revenue per user is going to go down. I'm already modeling this in and having a modeled $61 ARPU for the users in Q2 2026. So overall, I have subs growing 23% quarter over quarter, but that only so that's subs, right? And this hits in the two revenue drivers here. It hits in kit hardware and consumer service. Kit hardware, as you imagine, is the revenue derived from selling the actual like Starlink device itself. And I have revenue from that going up 46%. But this is not something that we really care about since this is being sold at basically even margin. SpaceX is not trying to make money off selling the kit. So this is going up 46%. The actual service itself, the consumer service, I have modeled going up 11%. Again, even though subs are going up over 20%, this is because of the ARPU deterioration. The remaining two segments within connectivity are government and then also enterprise and mobile. Government is pretty straightforward. So the government, especially the Department of Defense, pay for their own specialized version of Starlink called Starship. I think this is pretty straightforward to model. I have it going up 29%. And then enterprises, let's say, Delta or United, if they want Starlink for their planes, it would fall into this category. Mobile is going to be within this category, but mobile customers, like you really need Starlink V3 to get actual revenue from the mobile product because you need Starlink V3 to enable direct to cell. I have this going up 16%. So to sum it all up, I have government at 425 million, enterprise and mobile at 585 million, kit hardware at 725 million, and consumer service at 2.115 billion. So for a total of 3.85 billion within the connectivity segment. This is compared to 3.257 billion in Q1. On a narrative basis, I think this is actually, it might tilt bearish because it's easy to say the operating margin is going to go down, the ARPU going down, and it's easy for them to say it's a bad thing. I have operating margin in this segment going from 36.5% in Q1 to around 33.5%. You have to understand that in between the current period and before we get Starship V3 constantly deploying Starlink V3s and thus the direct-to-cell customers start coming in, this is the trend it's going to go in. Simply because the net adds from new Starlink customers, again, are going to come from the poorer areas where the ARPU number is lower. Now, the benefit here is the Space Force-related launches that are going to be covered in this segment, those are very high margin and those are going to pick up. But whether or not it's going to pick up like fast enough and at volume that's great enough to offset margin deterioration from ARPU going down, that's a bit of an open question. So we're going to have to deal with incoming on this one. Two projects I would track here are the Space Data Network. This is a $2.3 billion contract that was, I think, finalized in May. There was a little contribution in Q2, but the real ramp from this project will come in the second half of this year. So we'll get a lot of revenue from that. That's going to be coming in the segment. Of course, the SBAMTI contract, these are the Space Force threat detection satellites. basically another Starshield type project. That's going to be another 4 billion. So all of that will drop into this segment, and it should be able to offset some of the ARPU deterioration. Once the V3 satellites start delivered by Starship, then the operating margin number is going to inflect up really, really greatly. So like we have to be waiting for that because it's each V3 satellites over a terabit per second, each 60, and you get 60 per launch. That's a 20 times capacity per launch improvement. So that will certainly improve operating margin in this segment. We just have to wait until that's getting delivered. All right, now the last segment, the AI segment, is by far the most interesting part. And remember, this is the XAI acquisition that closed right before IPO. Now, it's important because if you take the revenue numbers for Q1, it generated $818 million in revenue, but it had an operating loss of $2.47 billion, and it had an adjusted EBITDA loss of around $600 million. So this was a big minus on the thing. Now, since then, SpaceX has signed a number of very, very profitable compute deals with Anthropic, Google, Reflection, and so on. And importantly for Q2, Google and Reflection and all those deals are not yet in, but the Anthropic deal is in because the Anthropic compute capacity deal started billing in May. And how much it's going to add, I think based off the contract specified, it's going to add around 1.5 billion in revenue to the quarter. Now, if you take a look at the way the contract is structured, there is a 1.25 billion a month, but there's an initial discount. So the first few months will be cheaper than the later months. So that's why I have the number at 1.5 billion despite this starting in May. And with that 1.5 billion, I have the total AI segment revenue for Q2 2026 to be 2.5 billion. Again, this is compared to 818 million for Q1. So this is a 3.1x quarter over quarter. This will bring the operating loss down from 2.47 billion in Q1 to around an estimated loss of 1.6 billion in Q2. But much more interestingly, I think this makes it so that the segment adjusted EBITDA number is positive. Again, this was negative 600 million in Q1. I think we can go up to a positive 500 million in adjusted EBITDA for the AI segment, and that should be very good news for the company as a whole to show positive EBITDA here. So again, to recap on what we should be expecting going forward, the deals are as follows. Anthropic's deal is 1.25 billion a month through May 2029. Google's deal is 920 a month from October 2026 to June 2029. Reflection AI's deal is $150 million a month from July 1st. There's a few other things we'll be watching here. And that's the Cursor acquisition. The Cursor acquisition is not a cash compute sale. Of course, we're just buying the company for $60 billion in all stock. This is not going to close until Q3. So Q3 earnings is when we're going to start seeing the impact of Cursor within the company. And where we are based off of these deals at the beginning of July is around $1.4 billion a month, and this should ramp to $2.32 billion a month by October when the Google deal really kicks in. This is very good because the incremental margin on these compute deals are around 75 to 85%. So the payback, SpaceX is making just a ridiculous amount of money on these things and will make back the initial investment on each one of these deals in just a little over a year. So this is by far the most bullish narrative that SpaceX has going into the earnings. The important things to watch are if any additional compute capacity deals are announced and what the discount is on Anthropic's deal that started in May, and that should be made clear here. Now, the questions that I would be asking, and we'll see if management provides any commentary, I'll also break this up into the three segments. So for the space segment, it's this, the Starship R&D run rate. Right now, I have this annualized to around $4 billion, and any commercialization language will flip the R&D expense to capitalized hardware. So depending on how many more integrated flight tests there are needed versus just simple deployments will determine this number going forward. Of course, R&D spend is needed, but it's just going to be a minus on the bottom end until it begins commercialization. Beyond that, look for questions that look to see what the margin is or how much money is being made off the Starfall project, and also what sort of R&D spend is needed to do the 2028 orbital compute constellation milestone that they're planning for. For the Starlink connectivity segment, I'll be looking for two things. One is the V3 deployment timing. Will they be deploying an orbital V3 payload on Starship 14, for example? And also the cost-to-cost start on the $6.5 billion in awards. We don't want this to get pushed into any further quarters, and getting this deployed in Q3 will again help with the operating margin in the segment. And then for the AI segment, look for any progress signals on Colossus 2's expansion. I believe this is called Micro Harder with 2 R's. Look to see how far along that is. For the Anthropic ramp fee, see if they're going to commit to paying that or if they're going to back out. Again, any party can back out with advance notice. And also the Cursor closing. Look for any commentary on Cursor. Cursor looks to be ramping up pretty good, but we don't have any access to their financials yet. So we'll look for that. And that pretty much wraps up my preview of the earnings. So the earnings are next Tuesday. What day is that? August 4th. So I'll have a recap, and I'll have a recap of the earnings up either late August 4th or early August 5th. And that's pretty much it. I'll see you then. My name is Smelly Fingernail, the world's #1 bag holder of SpaceX. My current position is 1,531 shares for a weighted average of $209.58.